Good morning, and welcome to the General Motors Company First Quarter 2024 Earnings Conference Call. All participants will be in a listen-only mode.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host. And on today's episode, as you've already heard, we are going to cover GM's Q1 2024 earnings call.
On today's call, management will make forward-looking statements about our expectations. These statements are subject to risks and uncertainties that could cause our actual results to differ materially. These risks and uncertainties include the factors identified in our filings with the SEC. Please review the safe harbor statement on the first page of our presentation, as the content of our call will be governed by this language.
Now that we got the disclosures over with, let's go ahead and move on to Mary Barra's opening remarks, which, as always, have been edited to only include the parts that are important for this podcast.
In January, we outlined clear priorities for 2024 that are designed to build on our strengths and learn from the challenges we faced in 2023. I'm very pleased to share that the team is executing well against all of them. Around the world, we are very focused on growth and profitability, which means taking full advantage of our winning product portfolio to grow share without chasing unprofitable business. In North America, the fundamental strengths of Chevrolet, Buick, GMC, and Cadillac truly stand out. The team delivered a 10.6% EBIT margin in the quarter thanks to our industry-leading full-size pickups, the momentum we're building in mid-size pickups, the growth we are seeing in our SUV business, profit improvement in our EV portfolio, and our overall operating discipline. In our EV business, we are building momentum in production and profitability. For example, we have increased battery module production by 300% over the last 6 months. Quality is very good and continuing to improve, and the installation and validation of our new high-speed module assembly lines is on track. We are projecting to double our current capacity by the end of the summer. EV production rose sharply during the quarter, and our dealers translated that into a 21% year-over-year increase in EV retail customer deliveries. For example, the Cadillac Lyriq outsold all of the EVs from European luxury brands in the first quarter, and since mid-March, we are now delivering Chevrolet Blazer EVs with updated and improved software. All of our product programs are benefiting from the end-to-end improvements we've made in software, including the increased rigor we have instilled in our quality and validation processes. More importantly, the talented executives and engineers we've hired from the tech industry are raising the bar for software design and execution, which will help us truly differentiate our customer experience and the suite of software-driven products and services we offer. We're also making progress at Cruise. The team is back on the road in Phoenix, updating mapping, gathering more road information. This is a critical step for validating our improved self-driving system and building upon the more than 5 million driverless miles we've logged before the pause. We are engaging frequently with regulators and stakeholders and building trust as we regain momentum. Safety will remain front and center and will guide our progress. In our EV business, the Ultium cell plant in Spring Hill is shipping sales and scaling production through the year. The Chevrolet Equinox EV will arrive in showrooms this quarter, and we're very excited because it will be the most affordable long-range EV in the market. It will also offer Super Cruise, like all of our Chevrolet, GMC, and Cadillac EVs on the Ultium platform. We will then introduce more affordable trim series for the Chevrolet Equinox EV, the Blazer EV, and the Silverado EV in the second half of the year, which will help grow volume and share. Also in the second half of the year, Cadillac will expand its EV lineup to include the Optiq and the Escalade IQ. This is important because EV adoption in luxury segments is higher and more resilient than in the broader market. Two of our most highly anticipated launches are the GMC Sierra EV Denali and the Chevrolet Silverado EV RST. They are best in class in ways that truly matter to truck customers. By optimizing the battery, aerodynamics, and other systems, we were able to increase the range of the RST and the Denali by 10% to an estimated 440 miles, which is about 40 miles better than the median range of ICE vehicles on the road today. No EV pickup on the road today even comes close, and it's possible to go even farther. A few weeks ago, 2 road testers took the RST on a drive from Las Vegas to Phoenix, and they drove it like customers do, on paved and gravel roads, at freeway speeds, at different temperatures, and different elevations. At the end, they managed to travel 460 miles on a single charge. It's the same story for towing. One journalist drove a Silverado EV work truck and 3 competing battery electric trucks on a 500-mile trip over the Rocky Mountains while towing trailers. It wasn't even a competition. The Silverado EV stopped once to charge, while every other truck had to stop 4 to 5 times. Chevrolet and GMC are also the only pickup brands that allow drivers to tow while using Super Cruise, our hands-free driving technology. That's just one of the several features that uniquely differentiates our products.
So let's go over a couple of the things that Mary discussed. First, battery module production was up 300%. That's great. They started selling the Chevy Blazer EV again, which is wonderful. They had to shut that down because of some software issues. GM Cruise started up here in Phoenix, to my understanding, and I think they talk about this a little bit later in the earnings call, that right now they're just mapping. They're not operating the rideshare side of the business. They're human drivers just driving around mapping, and I don't think I've seen one since they started back in this area, and I used to see them all the time. Talked a little bit about the Equinox EV, which will come with Super Cruise, which is their self-driving software or driver assist software, let's call it that. I did a little research, and it's $2,500 up front, which may be included in the purchase price of the vehicle for Super Cruise. So you get the first 3 years free, it sounds like. And then after that, you have to pay $25 a month. I think that's actually a really good price. So hopefully GM really pressures Tesla with that. Let's see. I did not include this in the clip, but the Ultium-based Chevy Bolt will arrive in late 2025, and it's supposed to be affordable. Let's go ahead and move on to GM's Chief Financial Officer, Paul Jacobson, and we'll do his opening remarks. Again, edited for this show, his opening remarks. There was much more information in there, but we don't really need to know EBITDA information. I'm not even sure what EBITDA means, to be honest with you. I've looked it up several times. I can't keep it in my head. If I see it, I know it. Don't email me. All right, let's go ahead and listen to Paul.
As Mary mentioned, Cruise is resuming operations in Phoenix, along with testing in simulated environments and on closed courses, while they work to earn trust and build partnerships with regulators and customers. We expect full-year Cruise expenses to be around $1.7 billion. Let's move now to one of the most important metrics we're focused on, EV profitability. We continue to see sequential and year-over-year improvements in variable profit and EBIT margins as we benefit from scale, material cost, and mix improvements. Since last year, we have significantly reduced cell costs, with a large driver being lower battery raw material costs, especially for lithium. We ramped our first battery JV plant last year, and as they increased production and made other efficiencies, the cost of cells came down significantly. And cell plant number 2 in Tennessee is ramping even faster based on the learnings from plant 1 and is expected to reach full installed capacity by the end of the year. Collectively, these factors are helping improve vehicle profitability. For example, we have seen more than $12,000 of year-over-year cost savings in the Lyriq alone. As we continue to ramp, we expect to see the benefits from the production tax credit continue to grow and our fixed cost absorption to improve meaningfully. We wholesaled 22,000 Ultium-based EVs in Q1, up from less than 2,000 in the first quarter of last year, and remain on track to achieve our 200,000 to 300,000 unit production and wholesale volume target for 2024. I would also like to touch on EV pricing, which we recently adjusted on the 2024 Blazer EV. This action has been well received by our dealers and customers, and as Mary mentioned, the vehicle is gaining momentum. We assume some pricing pressure for both ICE and EVs in our business plan and guidance for 2024, but we continue to work on finding additional offsets through cost performance and other efficiencies. Importantly, This pricing action doesn't change our expectation to achieve positive variable profit for our EV portfolio in the second half of the year or our mid-single-digit margin target in 2025. We remain confident that when consumers see our new EVs and get a chance to drive them, they will appreciate the unique combination of design, performance, range, and value that we offer at multiple price points. And because of our supply chain efforts, customers are well positioned to leverage the $7,500 clean energy consumer purchase tax credit. In closing, I want to reiterate our capital allocation framework, along with our intention to be much more consistent in how we deploy capital. We are generating strong cash flow, which is funding our EV transformation and growth opportunities. These efforts include investing in future products, transitioning manufacturing capacity to EVs, and deploying resources into cutting-edge battery technology. At the same time, you've seen us adapt to the dynamic market, particularly for EVs, and made bold decisions to be more efficient with our capital spend, something we will continue to do moving forward. Our balance sheet remains strong, and on shareholder returns, we executed the ASR last November, and the response has been overwhelmingly positive, with GM stock outperforming its peers and being up nearly 50% since the announcement.
All right. I don't have much to add there. This is just kind of the financial side of what Mary had said. I think there's good information in there. Let's go ahead and move into our first analyst question, which is a question on Cruise.
Our first question comes from the line of Joe Spak with UBS. You may proceed.
On Cruise, with the relaunch, I understand the manually operated and mapping, but Mary, you emphasized an improved system. So maybe you could just give us a little bit more color on how much of the existing technology stack is really sort of being leveraged and what's being redone. And then just on the financial side, does the guidance assume any further steps towards that relaunch? And what about a capital need with the cash balance down to $700 million?
Sure. Well, first, Cruise, we're very excited that they're back on the roads in Phoenix. As I said, it is manual, but then we'll progress to supervised and then to unsupervised. And the core tech stack, what we've been doing since we made the decision to pause, is continuing to work and improving it. So we've actually strengthened the safety of the system by continuing to make sure we comprehend, I would say, low probability but higher severity type issues. Because what we recognized in October, although I think mainly it was an issue of not having built the right relationship with the regulatory agencies at all levels, as well as the public, and then being transparent. But we also realized, even though we demonstrated and externally validated that the technology was safer than an average human driver, we need to do more. And so that's what we've been focused on. That's why as we're going back to Phoenix, we're making sure we're up to date, but very excited about where we are in the technology and very much believe in it. For what we plan to do this year of getting back on the road and demonstrating, that the model works in one city, as I've said in the past, and then expanding from there, we believe it's comprehended in the budget that we have. And then as you look at how we plan to fund the business, we're exploring quite a few options right now, including potentially taking outside investments as well. And so we'll have more to say about that as we move through the year. But I'm very excited to be back on the road. We believe in the technology. We're making it even better. That didn't stop through this whole period since last October.
Notice how Mary said that GM Cruise needs to build relationships with regulators and the public. I think, and I mentioned this on Tesla's earnings call, but Tesla needs to put more energy in building relationships with the public. I mean, they definitely need to put in the time with regulators, but they need to change their image and how people see full self-driving and autopilot. So GM definitely had a really bad look with dragging that pedestrian, that bicyclist, and then, sending doctored footage to the police, and all of that was bad. And a lot of people got fired, and GM should be fined for that, to be honest, and they're probably going to be sued, and they deserve to be sued. But if you're going to move forward in this space, you have to re-earn the public's trust. the same thing goes with what Tesla needs to do. They need to rehab their image in the eyes of a lot of people. Now, I don't necessarily think that Elon's interested in that, but it needs to be done. All right, let's move on to our second question, which is what are GM's software goals over the next few months?
It relates to the software strategy as we move through the year and beyond. First, as Mike stepped back over the past year, though, he did an incredible job of reevaluating and changing our software development process as well as our validation process, and brought in an incredibly strong team of, probably more than a dozen people at the senior level to really focus on having the right software strategy as we move forward. So I'm very confident. We paused at the beginning of this year with the Blazer as we saw a limited number of consumers had an issue. We've moved past that now, and that's allowed us to strengthen the software of all of our upcoming vehicles. And so the goals for the next couple months are to launch with quality on time, and we're on a path to do that. And then as we go forward, as the new software goes across multiple vehicles, and that gives us an opportunity to focus more on growing subscriptions and services. But I'm very pleased with where we are with the team that we have and the progress they've made, and it's showing in our ability to launch with quality.
GM's had a lot of issues with software, so we'll see where this goes. We'll see if it's good or not. I don't know for sure. If you own a GM EV, a new one with the new software on it, like a new Chevy Blazer EV, or let's say one of our folks in the community is getting a new Chevy RST EV pickup truck, you tell me what you think of the software. I'm curious. All right, let's go ahead and move on to our next question, which is about EV sales.
Thank you. Our next question comes from Mark Delaney with Goldman Sachs. Your line is open.
Another question on EVs and on the pricing topic. The company spoke to good demand and feedback for its EVs, but the broader market has been quite competitive for EV in terms of pricing. I'm hoping to better understand if you think GM is going to need to take additional pricing actions this year to reach the 200 to 300,000 outlook that you have in North America, or do the demand signals you have from the market suggest you can hit that kind of volumes this year with relatively firm pricing going forward? Thanks.
Sure. Well, obviously the early results here as we're ramping up Ultium are pretty strong, with retail sales up about 20% year over year, despite the fact that the Bolt, which is sunsetting the prior generation, was down about 60% during the quarter. So retail demand remains strong. We've obviously seen a lot of softness in fleet, particularly on the rental side for EVs, but we see customers responding. Now, these are unadmittedly lower volumes as we scale up, but we're building that momentum that I think we need with the products to be able to, show consumers what our capabilities are. When you look at the statistics that Mary cited in the script about the range and what's in our earnings deck, you see that the purpose-built EVs are actually better in terms of performance, range, charging speed, towing capabilities, et cetera, than many of the other products that are out there on the market. And I think as consumers continue to see that, we'll be well positioned as EV demands at the retail side continue to trend. So we're obviously going to watch it closely, but the early indications are strong.
Based on that clip, do you think that GM is going to maybe not prioritize hybrids as much as they said they were going to do in the last earnings call? From a business standpoint, it makes a ton of sense to build whatever cars people want to buy. It'll be interesting to see how 2024 plays out for hybrids. 2024 and 2025 plays out for hybrids. All right, let's move on to our next question, which is similar, and it's about EV sales targets versus consumer demand.
Thank you. Our next question comes from Alex Potter with Piper Sandler. You may proceed.
First question on Ultium. You stuck to the 200 to 300,000 production guidance, which is good to see. But at the same time, you talk about how you're going to use consumer demand as sort of a gating factor. Would you say that the 200 to 300, is that something that you're going to stick to sort of come hell or high water and then gauge consumer demand from there? Or is it something that you could slow walk maybe toward mid-year, toward the second half, if it doesn't seem like the consumer demand is materializing?
We're never going to just build products come hell or high water because the numbers out there. We're always going to be responsive to the customer. But we do believe that we're going to be in that $200,000 to $300,000 range with the number of EVs that we have launching off of Ultium. We're seeing strength with Hummer as we're ramping that up. We're seeing strength with Lyriq, and Blazer is just now ramping up. We've got the Equinox coming. There's several more. So I think when you look at the fact that these are all going to meet customers exactly, with the performance and functionality that they need, we think we're well positioned there. So I would also say, though, as you look across our portfolio, we are well positioned, whether it's ICE or EV, with the strength of our ICE portfolio. So we're well positioned to respond to the customer. Like I said, we are very focused on making sure that we don't overbuild, that we're able to maintain our price, our margins, and we think we've got the strength. And, specifically, if you look at Spring Hill, we can build EV or ICE in that plant. So I think we're well positioned. We think we're going to be in that 200 to 300,000 range by customer demand, and we'll just continue to adapt.
Yeah, I think it would be a really big mistake for a company just to build as many of a product as they possibly can because they said that they were going to reach this goal. So if GM is like, hey, we're going to build 200,000 EVs in 2024, and they have the capacity to build, let's say, 300,000, and they have the demand for 285,000, it doesn't make any sense for them to just build 200,000 EVs for that year. Same thing goes on the other side. If people aren't wanting to buy GM's EVs, it doesn't make sense for them to build 200,000. That would be crazy. All right. I think we can end that here. There was lots of EV talk on this earnings call. Unfortunately, a lot of it was like businessy sales numbers and all this other terminology that I'm not equipped to go through with you. So if you want to listen to the earnings call, I'll put the link in the show notes and you can listen to the whole thing if you're interested. But I want to thank everybody for listening to this episode. I really appreciate it. If you want to email me and give me your thoughts, it's Bodie, BODIE at 918digital.com. You can also support the show on Patreon. If you're interested, go to patreon.com/kilowatt or supportkilowatt.com. All the money goes back into the show. None of the money goes into my own pocket. And then what's the other thing? Oh, I have a new podcast. It's called Beyond the Post. And I would really love it if everybody went and checked it out. There's links in the show notes. On the latest episode, Rob and I talk about 7 things you can do to monetize your content creation. So hopefully you'll find that interesting if you're into that kind of thing. All right, everybody, that is it. I hope you all have a wonderful week, and I will talk to you on Friday. Actually, you know what? I forgot I'm doing this experiment thing. I'll actually talk to you on Wednesday and Thursday and Friday. All right, everybody. Thanks for listening. Have a great day.